which are declining. And one of them is Mass Financials, reported a strong set in the third quarter. The asset quality came in stable. Disbursements improved by 6.5% sequentially as well. Kamlesh Gandhi, who's the chairman and MD, joins us now to detail those earnings. Thanks a lot, Mr. Gandhi. We spoke about a couple of weeks ago when your AUM had crossed that 10,000 crore mark. You had updated the exchanges with a promise that we will speak post your numbers. Now that we have some more details on your numbers, let's talk about the way forward for individual parts of your asset portfolio. You have alluded to this 23 to 25% sort of AUM growth that will sustain going forward. Can you give us a nature of the growth in that AUM? Microenterprises grew at 15% in the third quarter. SME grew 21%. Two-wheelers and commercial vehicles grew much higher, over 35 to 100%. And salaried home loans as well grew by about 180% year on year. What is the expected sustainable growth rate across all these parts of your portfolio?
Thank you, and happy to connect again. So as you rightly told, we have presented a very strong set of numbers. And if I take you through the AUM mix, we aim to become a well-diversified in terms of our AUM mix. So as we already mentioned in our press release that in the total growth, 60% of the growth is coming from our MSME segment, and the rest 40% is coming from the wheels and our salaried personal loan segment. So going forward, we are a company who don't see only quarter to quarter, but on a 3 to 5 year basis, we see ourselves on a concentrated basis getting 10 to 15% of our AUM from housing, around 25% from wheels, around 30% from SME, and rest from our MEL portfolio. So we are on lines in lines of getting this diversified asset mix going forward.
Okay. Mr. Gandhi, hi, welcome to the show. Just wanted to get a little more details with regards to the micro enterprise segment. While you have done well there, it's slowed as compared to the other segments in terms of AUM growth. So if you could just give us a sense in terms of what you're facing when it comes to, say, asset quality, the trends, what can we expect in FY25?
In terms of micro-enterprise loans, we are one of the oldest financiers to this segment and having a portfolio of close to 4,500 crores as I talk to you. But as I shared earlier, we would like to be a more diversified asset in our asset configuration. And fulfilling that objective, we will be focusing more on SME, wheels, and home loans, while MEL will always register a decent growth of around 10 to 15% going forward. But in the overall mix, it will remain important. But the growth rate as compared to other segments will be slower because the other segments at a lower base will grow faster. So once again, our MSME will continue to contribute around 60% of the total assets, while 40% will be coming from wheels and housing.
One of the strategic changes that you were doing earlier was increasing your direct distribution from a little over 65%. You wanted to target that number to go to around 75%. That would mean higher OPEX, but that would be offset by higher yields as well. Where do you stand on that? And the second one was with regards to your dependence on NBFC partners as well. How much is that as a proportion of your loans being originated? Where do you see that number going?
So when we talk about our indirect retail asset channel, that is what we refer to our NBFC partners, and which is currently at around 34% of our total AUM. And within next 3 years, we see that approximately between 25 to 30% with our direct distribution gaining the momentum at a faster pace. So let me share with you that we have a wonderful experience in both the type of distribution, be it through our NBFC partners or be it directly. But since our direct distribution will grow at a faster pace, the share of our direct distribution will be at around 70-75% within next 3 years. And as you rightly remarked that while our operational costs might go up, but our yields will also go up. So the NIMs will be maintained and hence the ROAs and the ROEs.
Okay. Can you give us more granular details in terms of what you are facing when it comes to asset quality? Since you are increasing your exposure to other segments, are there any chinks in the armor that we're seeing when it comes to asset quality? Can you give us a sense in terms of what it's looking like, as well as your outlook in terms of provisions?
As far as we are concerned, we'll be very circumspect on the quality of the portfolio we create. and hence we'll be creating the portfolio taking into account that the asset quality is maintained. So throughout our product lines, we are very conscious of the fact that it is not done or the growth is not at the cost of the asset quality. So the asset quality is more or less in range of anywhere between 2 to 2.5% of GNPAs and between 1.5 to 2% of NPA. And we expect our credit cost anywhere between 1 to 1.5% going forward.
You've been doing well, in terms of consistency when it came to your growth and asset quality itself. Let's talk about a couple of other factors as well. One, housing finance. I remember you are predominantly, Gujarat, Maharashtra, looking to enter into Rajasthan and MP. What opportunities do you have there? How much headway have you made? And fintech tie-ups as well. You had alluded to tying up with a lot of these fintechs, which would give you a quarterly loan run rate of around 200 to 250 odd crores. Where are you on that? So both on housing finance and fintech tie-ups.
Say on housing finance, if you see housing finance has registered a robust growth of around 36% this quarter also. And we are predominantly into the western part, that is Gujarat, Maharashtra, Rajasthan and MP. And we are trying to penetrate deep in all the area of our operation in these 4 states. And we are seeing good traction there. Having said that, we are all aware that the market size is huge. But we are a company who will understand the demography in the right earnest. We will see to that we build the right teams over there and then expand our portfolio. So this has been the strategy of the company since last more 2.5 decades, and housing finance will be no different in terms of building up the assets. So we will see a good traction coming from the western side to sustain our growth rate of around 30 to 35%, which is 36% right now. And slowly we'll be moving to other states also. In terms of our tie-up with fintechs, I think we have been tying up with fintechs. We currently have tie-up with around 4 or 5 fintechs of the country, and whereby we originate portfolio through them, which is approximately not more than 5 to 7% of our total portfolio. We are seeing this space very closely. Having said that fintech is a very important part for origination. We are watching the asset quality, how it pans out over the medium to long term, and then gradually increase our exposure and increase our partnerships with them.
Okay, just quickly, Mr. Gandhi, before we let you go, we expect this kind of growth rate in terms of your disbursements as well as your assets under management to continue quarter on quarter, say on a year-on-year basis, over 20% growth?
See, we have always been sharing that we have very strong enablers to register a robust growth between 20 to 25%. And we have demonstrated that over a long period of, say, 25 years. And if you take the disbursement from a size that we were 1,000 crores in 2013, and we are around 10,000 crores in 2023, speaks of our capabilities to grow consistently across cycles. And that is what we have been sharing with all the stakeholders, that we have demonstrated an extraordinary capabilities to navigate through cycles and register a robust and a consistent growth while maintaining the asset quality and profitability. We see no reason why we should not be in a position to continue with very strong enablers of capitalization, a strong capital base. As you know, we are at 24% capital adequacy with an enabling resolution to raise further money. A strong track record of more than 25 years, a very strong liability track record, and a huge market to serve along with our niche expertise. We see no reason why we would not be in a position to continue with our growth of 20 to 25%.
Okay, all right, Mr. Gandhi, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Mass Financial, quite optimistic in terms of growth going forward. We need to take a short break, but we'll get you more on the markets, which are under pressure, and a lot of stocks in focus. Stay tuned.
Thank you.